Hi everyone, welcome to Genscape PJM Summer Outlook. In the room here we have Brian McIntosh, a co-lead for PJM team over here at Genscape, Rodri Williams, our weekly analyst for PJM, and me, Natalia Mistrishvili, a co-lead with Brian for PJM products. So without any further ado, we'd like to jump into our Summer Outlook. Just a quick note, if you do have any questions, please type in a little box on the side of the webinar, and we'll attend it at the end of the session. So we're going to start with just our quick assumptions, review 2012, go into 2013, and touch upon weather, generation analysis, congestion, as well as a look through current West Hub summary market, look at the fuel pricing this year versus last year, look into East Kentucky Power Corporation integration, and finish up with a summary. So our assumptions for this year is that with increasing gas pricing, we're going to see those gas units over in the eastern side of PJM less competitive for the summer. And I mean, we already observed a bit of a slowdown in coal to gas switching, and that's what we anticipate this summer as well. Our other assumption is we do anticipate above normal temperatures, not as high as 2012, but still above normal for 2013. And our main constraints are going to be your interface constraints that we're going to go into more detail later, as well as your localized congestion during the summer months. So just a quick review of 2012. As you can see on the graph, we had our strongest month was July. Average peak RTO was 125 with average settle for July $60.13 with $2.95.94 on gas. And the strongest day was July 17th with 151.1 gigs and 288 on gas prices, with 141.98 as a settle. Definitely not as high as the year before. We did reach over 160 gigs, and with low gas pricing, we could say that it wasn't a very eventful summer. The next slide just shows a quick, more graphical comparison of your West Hub LNTs versus demand, and just again to reiterate, we did have our strongest month in July. The first couple of weeks, and it was followed by August with the prices ranging around $60 to $70. Looking back at temps for 2012, we did see above normal temps, especially in ComEd and Western region. For 2013, we do anticipate above the normal temps, but not as high as what we observed last year. Going to precipitation, we did have drier than normal condition again in the West and ComEd regions, and we saw the eastern part a little bit more precipitation than usual. It's your Mid-Atlantic as well as the South. 2013 looks similar to 2012 and a little bit drier. So to go into 2013, Rodri Williams will take over.
Thanks, Natalia. I'm going to talk a little bit about our weather outlook prepared by our meteorologist here at Genscape. So as Natalia mentioned, we're looking for a warmer than normal summer, really across the Midwest and East. Not as warm as we saw in 2012. The forecast risks favor slightly milder for ComEd, West, and the Northeast, with some upside risk on temperatures in South to Southeast. In terms of precipitation, again, drier than average conditions for the Midwest and extending into the East and Northeast for the summer of 2013. We'd be looking for some wetter risk for the East Coast with more tropical storm activity, most likely to occur kind of late summer, early fall, with those storms bringing more rainfall than forecast. The general consensus is that we're not really differing that greatly from other vendors out there. Really just warmer versus cooler risks for the summer in general, but not as hot as we did see the previous year. This next slide shows the historical peak temperatures and demand peaks for Western ComEd and the Mid-Atlantic and South. So you can see these the three cities along the top, the West: Pittsburgh, Cincinnati, and Chicago. We generally see the peak temperatures correlating well with the peak loads. Kind of the mid to late July time period is where we're seeing the hottest temperatures in those three cities and the highest demand peaks for those two areas there. In the Mid-Atlantic and South, there's a little less correlation. It tends to be Richmond and Baltimore see their peak temperatures of the year earlier, again right around mid-July, whereas Philadelphia peaks later in the month. And that corresponds with a slightly more spread out peak demand range for the Mid-Atlantic and South through mid to late July and early August. Next, I'm going to talk a little bit about some generation outages we've seen. As usual, there's minimal forecast generation on outage for the summer period. Most of the generation risk comes in the form of unplanned outages. Some notable areas that we have seen is a large volume of gas-fired generation in PSEG and JCPL, that northeast corner of PJM. That you're seeing a number of units still on outage and unclear on when they may return due to the impact of Hurricane Sandy last year. So while Natalia mentioned that you may see PSEG, certainly gas-fired generation, not as competitive as we have seen it, those generator outages, especially during those peak demand days for the Mid-Atlantic, you may see some additional upside on energy costs through the mid-July to early August time frame. I also wanted to touch upon some notable gen deactivations that we saw towards the end of last year. This is really focused in ATSI and PEPCO. Looking at ATSI, we saw the Bayshore units, about 495 megawatts, and the East Lake units, just over 800 megs, retired at the end of the summer last year. Notably as well is some PEPCO peaking generation that came off through the course of 2012. Notably Benning, Buzzard Point, and Potomac. That's about 1.3 gigs in the Mid-Atlantic there, and that certainly does add to some of the upside risk on those peak demand days, notably something like AP South or Dobbs as you're seeing power flow into the Mid-Atlantic area. And with that, I'd like to hand off to Brian McIntosh, who's going to talk a little bit about the transmission risk further.
Great. Thanks, Rod. And just so you know, there's just a couple questions out there. We will get to those at the end of the presentation. And one we can address right now. These slides will be made available to everyone on the call. Anyone that registers will email a copy of the PDF. If not this afternoon, you'll get it tomorrow. So back to the transmission and congestion analysis. A couple pieces tie into what Rod was just talking about in terms of those unit deactivations and some of those outages in PSEG. But before we get too far into it, this is kind of just a graph that shows the way that power generally flows through PJM. It starts with a lot of baseload coal and nuclear generation out there in Illinois and ComEd, and then as well as AEP, and kind of works its way east toward the major load centers, which are, we tend to think of as your eastern major cities, your Richmond, Virginia, Baltimore, DC, Philly, and then up into Jersey. So while this is the kind of natural trend that we see, last summer we didn't see it as much because because you had a little bit more of coal to gas switching as we had touched on, and for that reason you had some more generation online in the eastern half of PJM that kind of made that west to east pole a little less strong through the through most of the month of the year. This year, that's not necessarily going to be the case with gas prices being that $1.50 stronger. I think your coal units are going to be a lot more economic, and you'll see this west-east flow a good amount more. And we've already kind of seen that trend already taking place. So the first constraint we want to talk a little bit about is the 500X and west interfaces. 500X is made up of the Conemaugh to Juniata and Keystone to Juniata 500 kV lines, and it flows from western Pennsylvania into eastern Pennsylvania. When you see congestion on this interface, you tend to see a upside to the east hub, PSEG, and especially the PPL zone, and you see a downside for Penelec and for west hub congestion costs. The west hub LMPs is a little bit trickier when you see congestion on either one of these interfaces, because while you do get downside on congestion costs, the LMPs don't necessarily get really hit hard with the downside. It's more the congestion costs that you see get really hard downside. Reason for that is you still have a lot of nodes to the eastern side of the constraint, especially the west hub nodes that are located in PEPCO. The west interface adds in the Conemaugh to the Conemaugh to Hunterstown line, which is this 500 kV line to the south, the bottom arrow there. And again, this is a pretty similar type of constraint that gives you upside to the east hub and to PSEG and PPL. It doesn't give as strong a downside to the west hub MCCs, primarily because you get even more of an upside on those PEPCO nodes. The other main thing I think that's worth noting on this constraint is you do have a outage on both Susquehanna units right now. That's the nuclear plant in the eastern Pennsylvania. Those units are scheduled to be back at the end of this month. What happened last summer is, because there's some major turbine work going on at the plant, that they were extended into mid to late June, and then even a touch of July. So I think it's important to watch those outages, and if we have some strong temps at the end of this month into June, and if any of those units get extended in terms of into the summertime here, I think you have a greater likelihood that you'll see a good amount of 500X. The other reason we like this constraint is back to Natalia's original point that those gas units in the eastern half of PJM may be a little bit less competitive. That makes the coal units in western Pennsylvania, your Keystones, Conemaugh, Homer City, a lot more likely to run and flow to the east. That will add stress to interfaces like this. The second interface we want to talk about is AP South. The biggest thing to watch for here is the Mount Storm Dobbs 500 kV line. There's major reconstruction work that's been going on there. The line has been out since September 1st. It's scheduled to return on May 31st. Assuming this goes into place, that should take some pressure off of AP South, but I don't think it necessarily eliminates the problem. The reason being there is, as Rod mentioned, we've since last summer we've now retired units at Buzzard Point, Benning, and Potomac. Last summer the Potomac units were in service, and we actually did see the Potomac transformer congest a decent amount. I'm not sure that's necessarily going to be the case here this summer, because you don't have the generation to dispatch when you congest the Potomac interface. So the things to watch for here are the undercommitment in the Mid-Atlantic. When you see that and you see strong generation coming from units like Mount Storm or Hatfield Ferry or Fort Martin, all of those generators will be ones that will push onto AP South. The other potential constraint you could see here is like a Loudon transformer. That's another node that, with the new trail line in service, a lot more power flows into Loudon and needs to step down into Northern Virginia. The last constraint we wanted to talk about was some outages on the Carson transformer. There are 2 transformers there. One of them is scheduled to go out for the majority of the summer. The constraint that you'd likely see is the Clover transformer. That type of congestion would give you upside to Dominion, upside to the West Hub, Pepco, and BGE. What is happening when the constraint happens here is you have a high demand in the Richmond area, hot summer days in Northern Virginia. Without Carson available to step power down into that region, PJM needs to dispatch down one of the units at Clover, which flows from, you can see that circle there on the left. It flows Clover to Carson, and because you can't step any of that power down into the low voltage in Richmond, you need to dispatch that down and dispatch up units in downtown Richmond, and that gets pretty expensive for Dominion. I've also listed a number of outages that are currently on the schedule for June, July, and August. Obviously, there aren't too many of them in July and August because of the summertime, but these are ones that I think are worth keeping an eye on. Look at the impact, see if they have any impact on any of the hubs or zones that you're trading. The one that I did want to note is the top one, the Lemoyne to Midway outage for the month of June. Rod touched on some of those retirements in ATSI. Those retirements combined with this outage may drive some upside ATSI, downside AG hub congestion in the month of June. So I'd say go through some of these. You can definitely, if you have any questions, you can ping Natalia, Rod, or myself. We'd be happy to talk to you about congestion. That's something we look at quite a bit on a daily basis. What I'd like to do is take a quick break from the presentation and show you one of our new products that I think is something that we're using quite a bit. It's our transmission RT product. Basically, if you're looking here, a lot of you may be familiar with the Genscape map that shows all of the power plants across PJM and what their current output is. What we've done with our most recent product is we've now added the transmission flows on a number of the high voltage lines throughout PJM. So what you can do is you can monitor some of the flows on some of the major lines within PJM. We found this really useful the other day when we had AP South congestion coming in on Friday. And what we were able to see is we could look at not just the AP South flows that PJM published, but we can look at the individual lines. And what we saw is we were looking at the Mount Storm Meadowbrook flows, and you can see at their peak they were flowing, 1,200 to 1,000 on days last week. But as we got into Friday, those spiked up to upwards of 1,300, 1,350 in terms of their megawatts on that. And what we can tell from that is with the North Anna nuke still down and out of service, and a Cunningham to Elmont outage, you could see that the flows were being strongly pushed onto the Mount Storm Meadowbrook line, and we were seeing congestion on the AP South. So that showed us the Meadowbrook to Meadowbrook to Mount Storm line, and the other one we looked at was, I believe, Cunningham to Elmont. And so you could see some of the flows. I think it was Cunningham to Dooms we looked at, Natalia. Yeah. Yeah. So you could see on Friday the shift from Thursday to Friday, the way the flows kind of shifted back on the Cunningham to Dooms line, and everything started flowing on the Mount Storm to Meadowbrook, overloading your AP South interface. So there's a ton of stuff here. If someone here is interested in getting a look at some of this data and looking at some of the flows, we're more than happy to give anyone a test drive on it, and you can get a hold of Natalia, Rod, or myself. We'll give you RIMs at the end of the presentation, and we can set you up with this tool. We enjoy it. We think it's pretty cool. So getting back to our presentation, Natalia is going to touch on the current West Hub summer market, and we'll get into a couple more things and wrap it up.
Thanks. All right, so we pulled out the data for June, July, and August contracts. Just to get a feel as where the market is and how it's been reacting to increasing gas pricing. And as you know, there's this inverse relationship between your trades and your hit rates. I'm not sure if you can see that closely, but in February, we were the June contract was trading in low 40s when our hit rates were around 12 to 13, and that started trading up as hit rates and gas prices came up and hit rates came down. So if you look further for July and August contract, it's pretty much the same trend. We had seen a little bit of a slowdown, increase of gas pricing, and that's why you see for the last a month or so, we've been just hovering in your 60s. So what we took away from this is that you have some of your gas units that are not being hedged in your pretty much in your day-ahead market. Going further into the fuel analysis, just wanted to give you the ballpark, an idea of where we are with our current market, gas price market, and where we were during this time last year. And you can see this overall jump in gas pricing, which supports our idea that those gas units are going to be less competitive as we go into the summer. Just a quick snapshot of a day in 2012 as well as 2011 and the supply curve that we had for those 2 years. I'm not sure if you can see it from the presentation. I think you'll be able to see it once you get those slides yourself. But your top curve is your supply stack for 2011. The red dots on it is your representation of your gas units. And the bottom curve is your 2012 curve. And as we noticed, most of your gas was predominantly throughout mixed with your base load at the very low demand levels. And for the top supply curve, all those gas units are pretty much concentrated top right area once your demand starts building up. For 2013, we expect the supply curve similar to 2011, which is your top one. It's definitely in between just because we don't anticipate such strong load levels this summer versus 2011. But from the supply curve analysis, it's definitely closer to 2011, and yet again, due to gas pricing. Just a quick look at East Kentucky Power Corp. It is getting integrated into PJM as of June 1st. This is just an overall outlook on the area. Pretty much, we don't think it's going to have big of an impact. Supply to demand ratio is 1-to-1. The all-time peak load was around 3.2 gigs, and pretty much we're going to inherit a similar amount of baseload generation with your Spurlock of 1.3, Smith around 780 megs, and Cooper at 340, and with Smith reaching 1 gig during your winter months. They did run one trial scenario that was in the beginning of the year, February 7th, for the June 1st, and those were your results at the bottom. Pretty much minimal risk for the West Hub. It did have a bit of a downside to Dominion and downside to NIPSCO and Southern Export. Congestion-wise, they posted Spurlock to Stewart 345 kV. And just to wrap it up, our main assumptions for this summer, we do think with high gas prices, you're going to see less competitive gas units, slow down in coal to gas switching, stronger flows on your interfaces as all the base load in the west will try to supply power into the east. Therefore, you're going to see those strong congestion on the interfaces and some localized congestion risk. As of right now, current weather models are forecasting above average temperatures, but yet again, not as extreme as last summer. So that pretty much wraps it up. I know we have a few questions out there.
Great. I think it's one kind of question that's come up a couple of times is asking about the Hudson transmission project. People want to know what our thoughts of the impact of that are going to be for this coming summer. For you that aren't aware, there's a new transmission line that's been put into place between PSEG and Zone K in New York City. They've done some testing on it earlier this month, and we did see some congestion driven by that gave a significant upside to PSEG. I think part of the driver behind that was some planned outages. One was the Roseland to Whippany outage, and one was the Branchburg to Rampo line. The actual Hudson transmission line is scheduled to go active and be exporting power consistently on June 1st. From everything we've heard, they're still on schedule to do that. I think that overall, there is a bullish impact to PSEG and PJM there, just because we are going to be exporting another 600 megawatts in the middle of the summer. But I do also think that because what we've already said is with some of these gas units in the east being a little less competitive, that also means that you'll have that capacity available to run if PJM gets into a bind. So I think the most important unit to watch for is Bergen. That's the unit that's basically at the source point of the new line. So I do anticipate that unit will run a decent amount and push power into New York. But the other units around it, Linden, Hudson, Martins Creek a little bit further to the west, I think all of those are good units to keep an eye on and watch what they're doing over those early summer days. Do you want to? Okay, I think that's the primary question. If you have any other questions for us, I'll make sure that we we send you an email and we give you all of our contact information. The other thing we wanted to note is for you guys that aren't familiar with the Genscape Market Intelligence product, we publish reports daily for the PJM BAL Day, Next Day, BAL Week, and Next Week products. And if anyone is interested in getting some more information or would like a trial, we'd love to talk to you, and you can get a hold of one of the three of us. But like I said, you should see an email here in the next day or so. So if those are all the questions, then I think that'll wrap it up. Thank you to everyone for joining, and keep an eye out for an email. It'll have all of our contact information.
And also, if you could please take the survey at the end of the webinar when you close out, that would be greatly appreciated. It's just a few questions to help us improve our future webinars.
Thank you, everybody.
The organizer has ended the session, and this call will be disconnected. Goodbye.